If you're in your 20s or your 30s, even 40s, make sure you watch to the end. Hello guys, this is Chuka once again. We're back to the second episode of Investment Talk with Chuka. So today we will go deep into what investment is all about. So basically, what is investment? Investment is simply multiplying your income, your funds, and use your money to grow more money. That's basically what investment is all about. And so today we'll be talking about investment as regards those in 20s, those in 30s, and those in 40s. And this range of age bracket is actually where most mistakes are made, most achievements are made, and most importantly, this is the age where you define your future. As my people say, this is the stage where you lay your bed. How you want to lie on your bed for the rest of your life, this is the stage where you lay your bed. And why is this so? It is so because in your 20s, you're more risk adverse. So also in your 30s, your risk appetite is more. Investment without risk, you're just wasting your time. There must be risk. As a junior trader, each time I make money and I get excited, my head of trading will say, look, Chuka, I hope you're prepared for the day you lose money, because as you make money, someone is losing. So that's one thing about investment. The higher the risk, the higher the reward. And so we're going to be dissecting all this. So what type of investment will you be most likely looking at? There are very simple investments that you can get involved in. One, stock. People call it equity. You get involved in buying of stock from companies. How do you do that? Simply, you're trying to invest in a company, buying a certain percentage of a company. It might be small, it might be big. One of the things that people make mistake about is the fact that you worry about, I need to have XYZ amount for me to be able to start investment. No. As my mom used to say, if you cannot save when you have 10 naira, when you have 1 billion, you still cannot save. There are also other investments you can get involved in. Talk about fixed income market, Treasury Bills and bonds, for example. With less than 10,000, 20,000, you can invest in government securities. And guess what? Government securities are 98% risk-free. So what does that mean? It means that if you buy a stock, for example, if you buy into a company share, you're buying into a company share because you want to grow with the company. You must have done your own analysis. You look at, in the next 5 years, in the next 10 years, where will this company be? How will this company grow? And so most times, those who invest in stock is more of a long-term investment. When you invest in stock is different from perpetual trading. That's what we call it in trading world. Stock is not something you buy today and then you hope to earn or sell back tomorrow. No. And so it is very important that before you invest in the company, you do your analysis, do a research about the company. In the next 10 years, 20 years, will this company still be in existence? Where will this company be in terms of growth? And don't forget, a company with a prospect will definitely give you value for money, because as the company grows, the stock grows, and then, of course, you make your money. But in as much as stock is good, stock also has the risk element. So do not, I repeat, please do not make anybody make you believe that investment is risk-free. With stock, you can actually lose 100% of your equity, which is why the risk is high. But with government security, you worry about price movement, you worry about yield movement, because for security, you're trading both yield and price. So for example, when yield goes up, price drop. And when yield drop, price goes up. So it's inverse. So do not forget, when you want to invest in T-bills, for example, make sure you understand where the yield level is, because it's the yield level that will determine how cheap you're going to invest in that stock. So what is Treasury Bills? Treasury Bills are government security, short-term government security, 90 days to 1 year. 90 days is currently trading around 17.5. That's the yield now. 182 days, which is 6 months, is currently trading around 18.3. 1 year is currently trading around 21, 22 levels. And so these are the three maturities of Treasury Bills that you can invest in. What about bonds? Bonds are long-term government paper which obviously, expand between 3 years to 50 years. Currently, we have bond of 2053. One of the fundamentals of investment is that you need to understand what you want. You don't just go into investment out of sentiment, all right? So if you understand that, look, I want to save, and you have a cash flow projection for maybe 6 months, and you want to invest in bonds. Coupon for bond, which is interest, is paid every 6 months. So let's assume you have a project in July, and what you should be looking out for, apart from you're looking for bond with high coupon, you also be looking out for your cash flow projection. Because when you're investing in bond, because you'll be earning interest every 6 months, it is always advisable that before those interests come in, you already know what you want to do with the inflow coming in. And that is why bond helps you also to manage your liquidity. It helps you to plan yourself. Let's say you have kids in school and you have to pay their school fees every 6 months. So you invest in a bond that gives you that liquidity inflow every 6 months. If you have a project, for example, you can say, look, this project, I'm tying this coupon payment, this interest within this period. So that helps you to plan your liquidity flow, your cash flow. That's what we call cash management system. So what other investment you can get involved in? You can also get involved in real estate. Yeah. Real estate, you don't need to own a land, you don't need to own a house, or you don't need to buy a house for you to invest in real estate. One of the smartest things most people do is that they invest in real estate companies that have properties everywhere. And so as the company grows, your money is growing with you. So you don't need to bother yourself about, oh, I have this property here, I have a tenant who has taken over this property, the tenant is not paying, or I don't want to build because I don't want to be chasing artisans. So you just give yourself that freedom, just take yourself off that pressure by investing in real estate companies. And guess what? Nigerian real estate company market is growing every 6 months as high as 30 to 40%. And so why would you want to stress yourself by chasing after tenants or chasing after money? Pardon the language. But for me, I think the smartest thing to do is to invest in real estate company. But that doesn't mean that you cannot invest in buying straight property, buying land. All right. But the most important aspect of investment, very key aspect of investment, is do not make investment decision based on sentiment. As a trader, you are told to be risk adverse. And so many of the mistakes I made and most of my colleagues made as young traders is that we get carried away. And so you say you put your stop loss as 20, for example, and then you see that the yield curve is moving up. You say, okay, fine. If I cut it at 20, I'll make $100. But if I cut it at 40, I'll actually make $200. So sentiment sets in, and then you get carried away. The bad aspect is that yield curve can reverse, and you will lose everything. So you shouldn't make investment based on sentiment. Another good example of not making investment based on sentiment is when people say, oh, when you buy land here, you make it big. The fact that your mother bought land there, and from the one buy land in this particular community or this particular environment wasn't part of your investment plan, why would you want to get involved in it? You should have investment plan based on your projection. We must be disciplined in making investment decisions. You don't just wake up and you make investment decisions just because it's working for Mr. A. No, it doesn't work that way. Another investment you need to get involved in is commodities, agri products. My wife used to have a girl, who is from the north. And some certain period of the year, planting season, she takes loans from my wife to plant either tomato, onions, and all that. And one day I called her and I said, wow, you're a great investor. She said, no, sir, I'm not investing. I'm just taking loans so that I can send to my people. They will buy and grow tomato and some farm produce. And I said, yeah, that's exactly what you're doing. You're investing. Knowing fully well that this period is planting season, invest in raw materials, knowing fully well that at harvest period, you're going to make more money. So she's investing without knowing it. What she's doing, it's what we call in trading, we call it position taking. You take position when you know that the price of a particular product is going to go up. And so we all invest every day. but we don't know we are investing actually. The whole essence is for you to understand that when you're intentional about investment, and that's the word I've been looking for, you have to be intentional about your investment. How do you get intentional about your investment? One, make sure you have what is called standing investment accounts, where you have an instruction that at every point in time, at the end of the month, this amount goes into this investment account. That way, you already have a certain amount that is dedicated for investment. If you don't do that, the danger is that you get carried away and you say, oh, last month I invested 2 million. Let me just enjoy that one, enjoy this. Because the truth is, the more money you have at your disposal without plan, you're going to use it. So when you're intentional, that's why I use the word intentional, you will be disciplined in terms of cash flow. The way you invest in Treasury Bills and bond, which is government security, is different from the way you invest in stock, equity. It's also different from the way you invest in agric products, because those, for example, who invest in agric products, farming season, June, July, you're investing because harvest time is August, September, November, December. It is different from a man who is investing in bonds because he expects to make some investment decision with the interest from the bond. So it can be anything. It can be school fees for the kids. It can be a particular project. And that is why, for me, the best form of savings is investment in bonds. You can never go wrong with it. First of all, it helps you to plan your cash movement. It helps you to plan your life. It helps you to plan and discipline yourself as regard what you're going to do with liquidity. For me, I think that as a teenager, as a 20-year-old, 30-year-old, 40-year-old, this is the best time to start. Start small. Be intentional, be disciplined, be risk averse, and at the same time, ensure that you know what you want. No sentiments in terms of investment. Ensure that you keep your eyes on the ball. So we'll be talking more on other aspects of investment. And by the way, inflation result just came out today, and inflation it came out at 34.8 levels from 34.6 levels. So why am I talking about inflation? Inflation is one of the major components of investment. Inflation may or mar your investment because the value of your investment is determined by inflation. If inflation is good, figures are down, the value of your investment, especially cash investment, it's okay. The figures are up, the value of investment, it is going to be greatly affected. And I can explain just a little bit of it. In 2023, beginning of 2023, our inflation figure was between 19 to 23. I'm not too sure which is it now. But for the sake of this conversation, 23%, right? The 10,000 you have in 2023 at 23% inflation will not be the same 10,000 you have in 2025 at 34.8% inflation. So it means that the value of your investment is affected, the value of your cash is affected, the value of your assets is affected. And so, how do you mitigate against inflation? This is part of the conversation we're going to have in the next episode. Make sure you tune in, make sure you subscribe, make sure you continue to follow our page. And then, most importantly, I always end with this. I am an investment banker and a practitioner in the market. So I'm going to be telling you things that you can't get out there. Tune in to our next episode. We're going to be talking how inflation affects your investment and what you can do to shield your investment from inflation.